What's going on, everyone? This is John Payne with the Cash Flow Veteran Podcast. Welcome to another episode. I'm really excited to have a good friend of mine and a former coworker of mine. He's still active duty in the Air Force. So I do want to caveat this that in no way is his opinions. They are his own. In no way are they a reflection of the Air Force or anything like that. So I at least want to start out with that, and nor are either one of us financial advisors. This is more as educational content that we're putting out, and just to have a general discussion about it, and should in no way be taking as advice on financial matters or legal matters or some such nonsense. Anyway, so Nick, man, how's it going? Welcome to the podcast.
John, thanks for having me. Really appreciate it. I definitely have been listening to your stuff and absolutely love it. And I can't wait to have the conversation today and talk about 401ks and TSP and should we invest and what's going to happen to the market and, are we going to have a crash? All those good things. So I can't wait to have that conversation here in the next for the next for next hour or so.
Yeah, right on. So, I mean, obviously, with Cash Flow Veteran, it comes from a perspective for military members, veterans, for spouses. So, just give me a little bit of your history and background, real quick, of your military experience so far, where it comes from, and then I'd get into a little bit of how that's informed what you're doing financially, kind of for your own financial freedom, and why we're even having this discussion today.
Absolutely. Absolutely. So joined the Air Force. I graduated from Purdue University with an engineering degree, and I joined the Air Force in 2008, like I said, and went into ICBM, so Intercontinental Ballistic Missile Operations, as a missile combat crew commander. It sounds sexy, but it was obviously an incredible experience going up north and protecting America. Using our ICBM force and managing that. So I did that for 5 years up in Great Falls, Montana. And then I went to United States Air Force Weapons School to learn how to be a better instructor for the Air Force and to be a better force for the ICBM community. And did that for 6 months in 2014. And then went to Vandenberg Air Force Base, where you and I got to teach our newest and brightest military members going into the ICBM career field. And then someone asked me, do you want to go over to the test and evaluation group down the street, the 576? I said, heck yeah, let's do it. And then you eventually came along as well. So we got to serve that and got to test our ICBM force and make sure that all the software, hardware is actually working. It's an old system. Let's make sure it works. So that was a lot of fun doing that for 2 years, and got the privilege to be accepted to school as a major. So I went to Los Alamos National Labs and was an Air Force fellow there. Again, actually the first time that I could use my engineering degree since college and actually talk to people that were engineers and scientists and get to do some computations and analysis on our nuclear weapon stockpile. So absolutely a blast. And not to also mention, in 2013, I got a master's in systems engineering from Johns Hopkins. So I was able to use my mechanical engineering degree, my systems engineering degree at the lab. Absolutely a blast. Looking at efficiencies as well. So I can't reiterate, Los Alamos was an amazing experience, and the people out there are great. And then got accepted, got another assignment, and it was at the Pentagon, and it's at the Joint Staff. So I am currently in Alexandria, Virginia, and I just moved here in July, working on the Joint Staff, and it's been a blast as well. But to go into the financial part, it really actually started well before my college experience. And my family had some financial hardships growing up, and kind of laid the foundation for me to say, okay, I want to do something different. I know that my family had issues. A lot of it knowledge, a lot of it was not really knowing, not having people out there to say, you know what, you should probably go down this route, or I'm in your best interest. I want to make sure that you're setting yourself up for success right now, but also for retirement. And so seeing that from afar, but also experiencing it in my family, I realized I want to do it differently. And I want to help others that are also affiliate with the military to make sure that they're set up. They have the knowledge, they have the tools so that they can go forth, whether it's in the military or when they retire or anywhere in between, that they at least they understand how to invest. And it's their choice if they want to take that route, whether it's financial investing or I want to invest in my health. Everything is an investment, in my opinion. And where that goes, you should at least know and have the tools and knowledge to go that way. So I started when I was 14 and getting into stocks. I liked that. I wanted to get to know what 401ks were. So I started really young, and over the next 20 years, learning how investments work and learning how the market works and learning macro and microeconomics and understanding, when we have a crash, what does that mean? What does that mean long-term? What is debt? All those things. And kind of, I've arrived recently and I'm like, okay, I've got these tools. I've got this knowledge. Now I want to do something. And in an Air Force terms, I want to weaponize it to say, how do we help and how do we tailor to our military folks out there, active duty, reservists, National Guard, civilians, veterans, and more. So in a nutshell, it was just kind of a self-taught process, because I don't know how you saw it, John, but when we were both stationed at Malmstrom and Fourth, I really didn't see a lot of tools out there that were provided as mandatory things. You weren't told, okay, you got to go to this class and you got to make sure that you score 100% on 401ks or 100% standard on making sure that your Roth TSP is properly allocated for an evolving market. And we didn't get those things. There's a TSP for a savings plan, and there's some funds out there. Go have fun and make sure that you invest in that, because that's important for your retirement. And you really either are interested in it or you're not interested in it. And I just happen to be like, well, I want to get more into what these funds are and beyond. And that's where I've arrived to your podcast today.
Yeah, right on. So what would you describe kind of what you're currently doing as far as investing? So you've mentioned TSP, you've mentioned stock trading. So, and we'll certainly dovetail into some of these other conversations here in a sec too, but what is it about, what specific investing experiences are you currently trying? What are you actually actively doing day to day? And then what are you also looking at long-term and as from that? And then we'll dovetail kind of more into the general kind of discussion of some of that stuff too. So.
Sure. Well, I'll start off saying I really took a step back and I reflected I self-reflected, and I wanted to look at my own personal finance and say, where am I deficient in? And I did this a little bit while back, and I said, okay, well, where do I want to, what's my goal in 20 years? I have 8 years left in the military to where I reach 20 years. If I extend and I keep going, what does that look like? So I wanted to look kind of goals. I wanted to see what, get an idea with that. And what I looked at first, and what I've encouraged all of my people that I've given advice to, is you first got to look at, where's my current health at? We have a thing in the military called a PHA, or a physical health assessment. You should be doing a financial health assessment. Where do I stand? What's my debt looking like? Can I control my spending? What is my budget every month? What does that look like? Am I spending it on things that are not necessary? So really trying to cut down my costs. So I looked at that. And then I looked at, well, in order to do those things, I need to look at a budget. Do I have a robust budget? And there's great tools out there with PocketSmith and other things that are out in industry that are free, as long as you don't have a gazillion accounts. Looking at a good budget program to make sure I can translate the FHA and the deficiencies that I had identified there into a budget that will cover down on me, and I can improve as I go. And at the end of the day, I'm saving money every month. That is an investment. My paycheck is an investment. So looking at that and then saying, all right, what am I at with my 401k? I've been contributing into my 401k, but am I doing it the best way? And so really getting into the nuts and bolts of TSP. And about 3 years ago is where this kind of process was happening, where I really got serious. And I was like, okay, I'm looking at TSP, and this is what I'm currently doing. So kind of it's a good dovetail. I know that if I put money, and you talked about this on your last podcast, if I put money in the S&P 500, I'm probably going to get about 9% return. Warren Buffett has said that if I just put money into a Vanguard account, after I die, I've told my wife I'm going to put 90% in a ETF and 10% in bonds, and you're going to do okay. I said, okay, well, that sounds like, he's a pretty big guru. I like hearing those things. I'll just do that. So I started to do that, where I just started to put money into very risky C fund, which reflects S&P 500. Your S fund is reflecting your small caps. Your F fund is reflecting your bonds. It's pretty much BND ETF in Vanguard. And then your I fund, which is reflected off of VEA in Vanguard, is very, very close. They are not identical. You cannot trade on the stock market TSP funds, but there are funds out there. I'm a huge advocate for Vanguard. So I wanted to make sure that the TSP funds that I can't trade openly on the market, what do I have out there that mimics that? And then start tracking it. So that's where I really got into making sure that I'm maximizing all of my money that I put into TSP. If I just throw money in, that's great. I will have some money at the end of the day, but actively managing your TSP is always a very, very important thing. But many, many people that have come to me and said, Nick, I'm a brand new airman in the Air Force. Should I put money right into TSP? And I say, stop. Do not do this. Okay. Keep in mind what the purpose of TSP is, and that is for retirement. You got to make sure that your budget is squared away. You got to make sure that you have your debt. Where is your debt at, and eliminate that debt before you ever start thinking about, I'm going to start investing in 401ks, or I'm going to start buying cars and selling them. I'm going to start buying homes. I'm going to start investing, venture capitalists, investing in companies, friends' companies. I've seen this before, as well as actually stock trading. So get your debt out of the way first, get your school loans out of the way, and then let's start really thinking about retirement, because that debt's going to pull you down. So I looked at my own debt and made sure that I had an avenue to get rid of that, and I'm lucky to say I'm debt free today, because that was my mission. It was to get that debt out of the way before I start doing stock trading. So currently, right now, what I'm doing is two big things. Three, I should say. One, TSP is great, but I want to make sure that I use those Vanguard funds and I track the charts with those Vanguard funds. And when I see something that I'm what's called a swing trader or a momentum trader. I am not a day trader. So, gotcha. So trading out there, there's different time spans when you trade. There's different styles, of course, within that. But I love reading charts. So I'm a technical trader. So I look at patterns. I look at previous patterns that have happened in the past and how they look now, and do I see the same pattern occurring? So Fibonacci sequences, various candlesticks that might show that we have a breakout happening. So I use the Vanguard ETFs that help me determine when I need to reallocate my TSP, because I can't do that easily with TSP. And there's a couple websites out there that are great forums for TSP. TSP Talk is great. You get everybody kind of a communal discussion. There's also paid apps that can tell you allocate now and change this and make sure that's, it's this allocation. The problem is that you can only allocate twice a month, and then your third has to go into G funds. So you got to be smart about when I want to change that, or I want to reallocate, because it could pigeonhole you into a situation where you have to put everything into government bonds, which doesn't make you a lot at the end of the day. And so I use charts to determine when I need to change my allocation. Now, let's talk about stock trading. Okay, so it has this dirty tones to it. It's like, oh, day trading is only 90% or 90% of day traders, supposedly the statistic out there, lose money. And then you have this very small 10%. And then you got hedge funds that are doing very similar things. So I wanted to learn how to stock trade. I knew that I couldn't day trade. I knew that because I'm active duty, I have a job day to day. I cannot be like, hey boss, I gotta punch and I gotta do some charts here. One, that violates ethics as a military officer. And two, I have a job that I'm trying to do the best I can. So I had to make sure, how do I do this right? So that's when I moved to swing trading or momentum trading. So really looking at when stocks or ETFs, when they have been oversold, they are low in value, and there is a good chance that there's going to be some fervor and the stock will go back up. So I want to see where those stocks are. I want to isolate them, and then I want to purchase them. On the other side too is called value trading, which is what Warren Buffett does. And you mentioned this on your last episode. Warren Buffett looks at companies that are good value, and he either buys them or buys a significant amount of that. For the average retail investor, that's going to be very hard. You don't have enough capital to do that. But what you can do is really look at a company, drill down, look at the shareholders meetings, or watch the shareholders meetings, or listen to them, look at their spreadsheets, and determine what their intrinsic value is. So what their true value is based on their market cap and their price, their stock price. And if you can find a deal, just like a house that you want to buy out there, the house is low value, it's in a great neighborhood, there's no reason why this house should be sold at this price. I know that in 4 years, 5 years, I can sell that house for twice the price. That's exactly what a value trader does, and it's exactly what Warren Buffett does, is looks at values and buys stock cheap, which means that he owns a piece of the company. And I didn't put a bet on this, but I really thought he was going to buy Southwest. I saw that in March. I was like, oh, he's definitely biting at the bit for Southwest because he loves airlines. And then he suddenly didn't buy Southwest and got rid of all of his airline stocks. So I was like, well, thank goodness I didn't do a bet on that at the casinos, because but that's, John, in a nutshell. I really look at trading my TSP using Vanguard funds, and then I also swing trade and I value trade. And the value trading really takes a long time, because you really got to drill down for hours, and you got to keep up with it to verify where that stock should be and where that market cap is. And that's what I advise people that want my expertise in this area, and why I've started my own investment company, militaryinvestmentgroup.com, to actually do these type of things and actively manage your TSP. But also, if you really want to get into investing, that advanced investing, then we've got resources for you to learn how to do that and be part of the community.
Yeah, I'll definitely jump into that a little bit more here in a sec too. So it sounds to me a little bit like, at least so most of my, I'll say, investing experience has mainly come from, I have a fascination with economics. I'll eventually actually go back to school and get my master's in economics. I actually want to do a doctorate at some point, maybe even a dual law degree, depending on, and that's much further down the road. I certainly want to delve into entrepreneurship a lot more, get into sales and marketing, some other stuff that I know that I'm kind of really good at, and then be successful and get that real world experience before I go back and just get, credentialed for other stuff. So, I come at it from kind of a macro economic perspective to begin with. But it does sound to me like anybody that's looking at doing something should take, you have to really become a student, and like as you get introduced to it, one of the things I fell into, and I talked to Dave Schulwitz on that podcast about, was you have that shiny object syndrome. And so when you get into it, you kind of start, oh, I like that a little bit, and I'm going to do that. And then you go, oh, well, I like that a little bit. And you really have to, pick one thing and really become a student of that one type of investing before you can really kind of branch out and do a lot of the other stuff. And it's, the difference between, in real estate investing, the difference between doing, maybe you want to try to buy tax liens, or you want to hold notes, or you want to flip the piece of paper and be a wholesaler versus actually being a house flipper versus being a buy and hold or a lease option or an apartment investor or an industrial park investor, a mobile home. I mean, there's all these different things that can get chopped up. But even the local real estate markets, depending on what region or state or locality they're in, also you have to become a student of all of that. Not only just the method, but you have to become a student of the place. And that certainly sounds quite a bit like what it is even in the investing world, because even my general forays into this area, it's you only really get just barely the tip of the iceberg when you really start looking at it, and you really do have to become a student overall.
Absolutely.
But with that being said, and my next question is going to be your thoughts on my previous podcast a little bit, but for somebody that's really kind of looking to start gaining that financial freedom, I think it's great that you're starting with a point like, get your health in order, get your mindset in order, get your debt in order, and get it out of the way, and then come from a basis of savings and investing in strength, rather than just trying to figure something out because you think it's going to solve your problem. To me, the number one investment you could do is increasing your ability to provide value to the marketplace and make money for yourself. But that also means you have to have the discipline to live under your means so that you can save and invest for a future type of thing. So all that being said, when somebody really is looking at TSP, or somebody is looking at investing, I mean, where would they start to really start digging into that type of stuff?
That's a great question. I think for the number one place you need to go is you need to look at the TSP website. I don't know how many people I've mentioned or I've talked to, and I said, in casual conversation, are you investing in TSP? And I'll get about maybe 70% that'll say, yeah, I am investing in TSP. Yep. I'm like, oh, cool, great, nice. That's good. What are you invested in? Oh, maybe I think it's that G fund. And what I find most of the time is people are all in G fund, and they don't want to look at it, or they don't want to be bothered by it. It's overwhelming. The first step, John, and you're absolutely right, is the education piece. You've got to get the education first before you take the risk. So when I was stock trading, when I first started off, I had a practice account. I had $3 million of paper monopoly money in TD Ameritrade, and I learned. And I got onto Warrior Trader, which is a day trading site. I'm not a day trader. I don't like that method of trading. It's a very short time period. You're only trading between around 9:30 and 10:30 in the morning, and you're looking at volumes. But some of the patterns that they look at help swing traders. So you have to get the education first, and you can't be worrying about stock trading when you haven't even looked at your TSP funds yet. So get onto the website, get on TSP, and look at the website first. And they have some very broad explanations of the funds. Then go on TSP Talks, which is I think it's TSP Talk. It's a great website for beginners, and they have more analysis on that. And then I would go and say, okay, what are the stocks? What are ETFs out there? And this is on my website here, is what are the Vanguard stocks that are mimicked out there that match up with TSP funds, and learn about them. Learn about what an S&P 500, what is the S&P 500? What is the Dow Jones? It's index funds. Okay. What companies are in that? And you'll get a better sense of what the C fund, which is an S&P 500 fund, what is in that fund? How much cost? Fees. You talked about fees a lot. What am I paying for when I invest in TSP? What do I want, a traditional TSP or do I want a Roth TSP? Okay. And that's very important, because where my taxes come out at the end of the day, do I see the tax advantage now when I put into a traditional TSP, or do I see that when I retire? And I have to agree with you that I don't know in 20 years what our taxes are going to be, but I have this weird sense. I won't bet on it like I did with Warren Buffett, but I bet that taxes are going to increase. I have to assume the worst. Taxes are going to go up, or I'm going to make more at the end of the day, and my tax bracket's going to go up. So what is the best thing for my family right now? Do I take a tax advantage at the end of the year on the tax burden, reduce my tax burden with a traditional TSP, or do I use Roth TSP and say, I'm going to take that tax hit right now, but my tax bracket is low, and I made sure it's low, that at the end of the day, I'm not going to get taxed on that money when I pull it for whatever reason I need. So you got to understand the funds, and you got to understand what TSP choice, traditional TSP or Roth. And then you just need to be a creature of knowledge and read, and don't look at the headlines. CNBC, I love that site. I love Jim Cramer. I was addicted to Jim Cramer. I can watch Bloomberg all day long. I'm obsessed by watching those shows versus like watching ESPN or anything like that. But those are sensationalized. Like their stocks are sensationalized. They're just news grabbing things. You need to get into the nuts and bolts. So Wall Street Journal, really understanding the economics, which is important, like you're saying about getting a master's or getting a PhD. If you're getting knowledgeable in the macroeconomics, getting into the nuts and bolts of what drives the market, then that's also important to get a handle on, just from a knowledge perspective. And then when you want to get into stock trading itself, you got to practice it. You just got to practice it. You got to make mistakes on fake money, not your real money. And you got to learn that probably was too risky, or I should have used only $2,000 here instead of 500, or, you have to practice with fake money in order to show consistency, to show that you can do this over and over again, and then slowly dovetail into real money and then consistently have results. If you're not consistently making profit, then why are you doing that? Same things with houses. Why am I buying houses or mobile homes if at the end of the day, I'm not making money on it? You got to make sure that it is a investment. Hence the term, you are making money or you're investing in something for the future. So that's from my perspective on where I would start first, is just getting that baseline knowledge at the website itself.
Fair enough. But yeah, let's go ahead and dovetail a little bit then into your thoughts on my previous podcast. And I do want to kind of acknowledge my general bias, I think, at this point, where I tend to think that if the government says that it's a benefit for you, or the government is setting a tax exemption or a tax credit, like whether that's real estate investing, I mean, there's certain things that are built for something. I don't tend to think that it's necessarily for your individual benefit as much as it is for them to incentivize a certain behavior of entrepreneurs or any other people that are looking to increase their financial pie in the short term and the long term, but they're also doing it in a way that maybe a free market wouldn't normally actually do that, which leads to malinvestments, which is why I kind of have a bias against that. And I'm not saying that people should not invest. I'm just saying they certainly need to go into it with eyes wide open. And the Austrian School of Economics is really the only one that I have seen that has consistently predicted, not necessarily the when, but certainly the how and the why the market will crash on a number of different instances that we've seen in the U.S., in other countries that are out there as well. And I'll hold off this one question because I kind of brought it up, and I was sitting down with a gentleman today that I am a coworker with at the place I work with currently. And we were talking about private organizations and stuff. And I asked him a question. I was able to kind of take something I said in my previous podcast, and I was able to kind of condense it a little bit better. But just in general, from kind of my acknowledged bias that's there, I mean, what are your thoughts about just my trepidation of actually getting into the market?
Well, I think having fear and questioning is always a healthy thing. You always want to make sure that you don't dive into something quick. when I first got into stock trading, I was like, what's driving all this? Like, when is the next crash going to happen? How do I know when the crash? That's the typical question, is how do I know? It feels like the system is rigged. It feels like I have zero control on day to day, why the market today, and if you look at the market even right now, it went down today. Well, why did it go down? Why would it more than likely be down on Monday? You got a lot of players, a lot of hedge funds, a lot of people that are much more wealthy than you and I getting into the market and manipulates it every day. Whether it's buying a whole bunch of stock, or they rally up together and they buy a whole bunch of stock in one thing, or there's fervor on Tesla, and now it was $218 a couple months ago. Now it's $1,700. Why is that? And what I will say is this racked my brain for months, and I got frustrated, and I didn't understand, is the government controlling us? Let's put a whole bunch of stimulus into the economy and let's see the stock market jump. I can't control those things. I can't necessarily control what the government or what these entities do. All I can control is in my own sphere of influence. I can control how much risk I want to put in based on those conditions. And I'm always looking at stock charts every single day to give me those indicators that something is up, or this is a weird anomaly. This does not look right, versus looking on CNBC and hearing, we definitely see a 30% increase by the end of the year. You see all these different, or there's going to be a crash. It's going to be a massive crash at the end of the year. I have to block those things out and say, I have to look at the charts, and I have to trust the risk that I want to put into it. So I guess bottom line is, you can't blame, what's the saying? You don't blame the player, blame the game. It is the game that you play in. You just got to know when do I need to go into that game and when do I need to back out? And you have to have rules in place. And you'll talk to any stock trader or anything like that. There are a set of rules that you set, and you don't get greedy, and you don't overstretch yourself, because at the end of the day, you're not controlling the game. You're not controlling the market. The market is we can only look at historical models to see what's happened in the past. Most of these crashes that we've seen from .com, from the housing market, there's a certain pattern. The pattern that we see today is not the same pattern that we saw in those other crashes. We don't see a bull trap, which is when the stocks drop like we saw in March. They bottomed out on the 23rd of March. And then for most indices, most sectors, and then we saw a nice climb. We've seen this right now, this big bull run that we've had. There's typically almost at 75 to 80% return back at all-time highs, and then it crashes again. And we haven't seen that yet. So that's a pattern that we've seen historically that we don't see now. So again, the market is controlled by things that you don't know or understand or get exposed to as retail investors, as military members. You're not in that world, so it's not controllable. You just have to be mindful of the charts and read them every day. And I don't know if that answered what you're looking at, but that's how I look at it. I can't get frustrated with predictions.
No, and I think you're bringing up a really good point where I'm not necessarily saying that, and it's one of the things that I've had as I've kind of swallowed, I guess, the libertarian pill a little bit, and I've been kind of researching things on my own and coming to certain conclusions that the system is kind of rigged. And the question that I have is, there's certain things I can't control, and I'm trying to acknowledge those, but then I turn around, and part of the reason why I'm building Cash Flow Veteran and coming at it from a perspective of how can I individually and with other like-minded people secede from the system and do it without government money, let's say, and but what's the thing that I can specifically do to improve my overall life and to promote liberty and to live within a context of liberty that I can, at the end of the day, that I can live with. And that's part of the reason why I got out of the military. And I certainly, my journey is not everyone else's journey, because obviously my wife is still active duty, and my conclusions aren't her conclusions. And we're figuring that out kind of as we go along, even though mine led me out of the military for all intents and purposes. So, I come at it from how do I take what I can control and do something about it? And there's a school of thought within libertarianism called agorism or agorism that is very much down the path of like cryptocurrency, because it's about counter economics. How do you take away the state's power to manipulate currency by the individual actions that you can take and the communities that you can kind of build from that of other like-minded individuals. So again, like cryptocurrency and some of those things are certainly attempts to be able to do some of those things. At the end of the day, though, I don't know how much that will actually take power away from the state, or specifically power away from the Federal Reserve to be able to print the money the way that it does and cause inflation and a lot of other malinvestments in the economy. But I think it's going to have to kind of collapse under its own weight eventually. But,
well, the gold standard, you mentioned about the gold standard. We're not on the gold standard, and that is a concern. I wouldn't say it causes me nightmares at night. I'm not to that level, but I do see a cliff. I do see it.
Yeah.
I do see our debt just radically out of control, and printing money at a furbish rate, stimulus like we've never seen before. I mean, have you ever seen where a check was in your hand, or have you seen money from the government going straight at, where are we? And it definitely, it is concerning on so many levels, and why my finger is always on the trigger to sell whatever I have very, very quickly. And I have mechanisms in place, because you never know that moment where things will crash. And it could happen very quickly. It did not actually happen as quickly in February as people thought. I actually saw the warning. If you're looking at the charts, you can see the warning signs about a week out, but that doesn't mean that that's going to happen in the future. And if it does happen, I hope it doesn't in the future crash. But with not being on the gold standard and it's all credit based, it does concern me. I am nervous about where we're at, and that's going to reverberate through housing markets. If you're into that, it's going to reverberate on just how much money it's worth at the end of the day in your pocket, and what your retirement's going to look like. If you think that investing in the U.S. long term is going to be the way it has been in the past, you really need to be more pessimistic about it. You have to be ready. And I give an example, like if, there was in Europe, in Ireland, there are people that have invested a lot of money in 401ks, and the euro has not been not as good as the US dollar in that same time frame. So people lost a lot of their savings. That could happen here. That could reverse in Europe, or China becomes, incredibly, especially China can be a very strong influencer. Their currency could outweigh ours. And so that's what concerns me, John, is, there's always that. I see a proverbial cliff based on our behaviors as a government. And also, if you talk to people, their own spending habits are concerning about how much they've overstretched themselves as a society. So,
yeah. I mean, I try not to take away people's agency, because at the end of the day, individuals are absolutely responsible for their own actions. But at the same time, I still acknowledge the reality of financial incentives or other behavioral incentives to go into debt or to buy a credit card when it's easier than ever. And that's kind of why I talk about TSP, even the matching or the VA loan or those things potentially being moral hazards because of the malinvestment that they do. They do throw off what a free market normally would have, because it's technically not a free market at that point if the government is coming in and guaranteeing funds for those types of things.
Right.
I will come back to some other thoughts you might have on the podcast, but the one point that I did want to make is this question. So at what point is a company no longer a private organization from a functional distinction? So not the legal distinction. And what I mean by that is just how much it gets funding through its contracts from taxpayer money that obviously is not voluntary. And that's one of the things from a libertarian perspective I push all the time. Like, let's do an experiment on even just a local level. Let's make these taxes, because you think they're necessary, make them voluntary and see how many people can actually see some of those things, but then also allow private companies to compete for some of those services and see which one actually works better. And don't punish the private companies for doing that. And you can start it on small scale and move up from there. And that's, as far as taking action, you got to work within the system that you're in sometimes to really succeed. The other part of that, so I talked about, tax funding through the government contract process. And now we see with a lot of the stimulus that just happened, which I'm highly critical of, is now you actually have the government owning and buying out corporate bonds, which is a backdoor into a government owning a private company, which is, for lack of a better term, that's an understatement to call it problematic, right? But then you also have the tax incentives for companies that wouldn't have investors otherwise, meaning, your 401ks, your IRAs, and those types of things. Like, I don't knock somebody for saying, hey, my company or TSP or the government is offering to match my 5% contribution. You'd be foolish not to take it. You'd be foolish not to take the money in stimulus that they're going to give you to try to secede from the system if you have to pay down debt. You'd be a fool not to use it to your advantage. But, again, but at what point, knowing all that, at what point does a company no longer really functionally become that? And I look at, my best example is Boeing. There was one point where Boeing absolutely should have gone under. I believe it was in the 90s. And
$89, I think it was right. Yeah, you're right. I thought they would get bailed out at that moment. So yeah, you're absolutely right.
Well, I just look at it because they, instead of like in the late 80s or the early 90s, Boeing, I think, and I'm going to have to go back and I'll fact check this and put it in, but I know I've heard it on multiple occasions from Mises University, the Mises Institute, a bunch of other places too, but they specifically were the DOD, the Air Force, did not buy Boeing planes. Instead, in order to keep it alive, made leases on planes they did not need in a time when the military was downsizing in order to keep Boeing alive and to be at least one of the main producers of aircraft and other machinery and stuff like that. And I just go, that's a level of corporate welfare at that point that you got to look at it and go, well, if it can't survive a free market, then what are we doing with it?
Right. Well, and I have to look at, from a military perspective, there's a $740 billion plus or minus change that's the military budget for this year. The DoD budget, that's an enormous amount of money. How much of that money is going to companies, contracts? Yeah. Where are these contracts at? As a military member, you owe me the right to tell me where that money is going, because that money could be used to save lives on the battlefield. And I would say, if you're really interested in seeing where the money is going, look at their fundamentals, look at their reports, look at their financials, and you will see an astonishing amount of money that if you really, really break it down, you're absolutely right. A lot of this money is coming from the government in one way, shape, or form to keep these contracts that sometimes never come to fruition, or they're, especially in, as you know, in ICBMs, like it takes a really long time for a product to come online. And how much money did we spend on that? I want to make sure that people on the battlefield are protected, but I also have this moral responsibility that people are starving in the US. There are kids that are starving. We've got other issues that we also need to tackle. How do we tackle those problems and still keep our military strong? But then also we got to make sure that these companies that are big names in the US alive as well. There's this tug of war going on right now. And that's from a corporate greed perspective. You're right. It's becoming more like China, because China does that model where they buy substantial parts of a company, Baidu or Alibaba or Tencent or JD. Like they have their fingers in these companies, and we say, well, that's only China does that. Like, well, actually, we are guilty of that as well. But we coin it differently and do things differently with it. we mask it differently. So I think you're onto something. You're definitely right when it comes
I think it's certainly it's just one more thing, one more feather in the cap of eroding our currency and stuff. And that's part of the problem that I kind of have with it. And certainly people could make the argument. And I think it's for, to have that conversation at another point in time on whether, we need all the military force around the world. And I mean, that's a totally different conversation to be had. And I certainly have, I've changed my mind on a lot of that stuff. I'm much more anti-war probably than I used to be. I think even the USDA that, we basically make people around the world convert to cash crops. And then in order to have regime change and have a popular uprising, we then cut off any supply, do an embargo and everything else and punish them financially, which hurts, children and women and innocent people in their country, hoping that somehow, the government we are just giving money to, 10, 15, 20 years ago, now that we're opposing, now we're punishing their citizens and thinking that somehow when we go in, they're going to love us as liberators when, the actions we've taken have gone, have somewhat been a large contributing factor, to say the least. I won't necessarily say it's been the total cause. I would take each individual circumstance and really take a look at it from a international relations perspective. But, it's just, that's kind of one of those frustrating things.
Pharmaceuticals are the same thing. FDA, pharmaceuticals.
Yeah.
We're talking about this vaccine. Like, don't tell me that this isn't driven by pharmaceuticals. So, and that's a whole nother animal. When you're talking about food and you're talking about and an investment, let's talk about that too. Is investing in your health. We tend to forget that the food on the table is the best medicine you can have. And
100%. However,
we want to just push pills and pharmaceuticals because that's what makes money. And this food over here is not sexy. So we don't want to push making people healthy by the food that they eat versus the pills that they take. So I think
right.
There's so many different examples of this, John. You're spot on. But back to like talking about the companies. At the end of the day, philosophically, I agree. Like this is wrong. But at the end of the day, if that company is making money from a stock perspective, I'm going to take advantage of that stock.
Sure.
And I think I've had people in the past say, well, I will not buy any Philip Morris. I don't believe in tobacco. Okay, got it. I don't necessarily look at the company. I look at the stock. I look when I'm doing charts and I say, well, Raytheon's making money or it's undervalued or Boeing's undervalued at $89, $88. I'm going to buy it because I know it's going to hit 170 in the next 3 months. Oh, you have to keep those kind of what the company is and what the stock is. And if you want, and if there's an ethical line there, you're like, I just don't buy any companies that do this, then make that a rule for you and move on. And I say that a lot to people that are like, well, I don't want to do marijuana stocks. Okay, that's fine. I understand that. But make sure that you're consistent with that and stay with those ethics.
Yeah, for sure. No, I totally get that. Well, I'm going to move into the Burst Fire series. So answer these. It's 3 questions. Just answer them as quick as possible. And this will kind of round out our discussion here. So what's been the toughest thing about being an investor in the way that you've been investing?
Discipline. Maintain discipline and not getting greedy.
So how did you, and this is kind of a follow-on question to that. So what, real quick, what specifically has allowed you to become more disciplined in doing that? Is there a particular technique or anything?
I have a set amount of cash that I invest in or I stock trade. And I have rules that are in place that make sure that I don't overextend that amount of cash or I don't go back to the piggy bank and pull more like you would. I make sure that it's a job. I won't say it's a career, but it's a job. It's not gambling. As soon as you start crossing over into the gambling, you've lost investing and now you're gambling, you're speculating. You need to be methodical and you need to keep emotion out of trading. If you're an emotional trader, you're a bad trader. You got to hit the rules and make sure they follow that. And if they don't, then you walk away. And so being disciplined enough to walk away from deals that may look good, but don't follow the rules, you need to walk away.
Yeah, right on. All right. So the next question. So what resources helped you the most with investing and just in general financial freedom and moving towards that goal?
read a lot of books, watched a lot of YouTube videos. Crazy enough, I watched the Young Investors podcast, which is another podcast out there from some guys in Australia, which are awesome dudes. They love this stuff. They love value trading. So I really got into just your retail investors out there and then doing my own research. I'll plug another thing, which is chartingwealth.com. That got me into looking at charts and reading them and having good rules and discipline while you're trading. So I used, that was my biggest thing was chartingwealth.com. It's a free site. It's a free YouTube channel every day that you get. And there's analysis there and it's short, 15 minutes. And it was a great starter to get into more advanced trading. And then Warrior Trader, which is a day trading site, there is educational services there. You do have to pay. But if you're serious about day trading, if you're serious about swing trading and you want to get some education, day trading, it has some good methods that translate to swing trading. So get out there and look at different sites that are free first. And then if you are more serious, pay for the education. But I've done that.
That's awesome. I was trying to look up one thing. I think it's called the Billionaire Investors Podcast. A couple of guys from, We Study Billionaires, the Investors Podcast. Yeah, it's a pretty good one. That's probably where I learned probably the majority of at least what I know about it. I haven't even delved into it. I know stock investing eventually will be something I certainly get into as soon as I can get some of the other stuff, figured out and squared away kind of in our life. Because Jackie and I certainly lived well beyond our means in our 20s for sure. And you got to pay for that in your 30s. But
sometimes we did. Yeah, we did too. And there's a lot of real estate out there. I will say there's a lot of podcasts on real estate, and I'm a huge believer in real estate. I have done real estate myself, and it was positive. It was a good experience. I like stock trading because it's something I can do on my couch. I can do it on my own time, and it worked for me. But you need to know how to read charts, and these sites, as well as coming to me and coming onto the Military Investment Group. We have all of those resources that will be pulled into one spot, so you can be the best investor you can be.
That's awesome. I'll certainly be reaching out to you for some of that probably too. So, so last question here is, what do you think holds military members, spouses, dependents, and veterans back from getting started in their financial endeavor?
Debt,
specifically stocks.
Debt. I'm gonna be honest with you. It really boils down to budgeting and getting rid of the debt that you either incurred when you're in college or you decided to buy cars and guns and different things, and you racked up this debt and you can't control your spending. I mean, those are really a lot of the one-on-ones I have with people that say, I want to start stock trading. I'm like, wait a second, how much money do you put away every month? You probably need to back off from that, and you need to relook at your stuff. So debt and then budgeting, those two things you need to do before you start investing in real estate and other things.
Well, one of the things that, I thought about as far as like what holds people back is specifically what you just said, but then going beyond that. And I think one of the things that kind of crystallized it for me was not that I was coming at it from a perspective of, hey, I know all of this stuff. It was more from the perspective of, hey, this is what I didn't know, and here's what I'm moving towards. And that's kind of what Cash Flow Veteran from an educational standpoint was. But you remember when we were at the schoolhouse in Vandenberg, I did a financial food for thought briefing for some of the guys just because I went, look, these are all the lessons, I screwed up on in my early 20s and late 20s. And now that I'm here giving something back to you, making you guys hopefully better officers, better missileers, but I also want you to be better people, better investors. And I want to spread this knowledge. So, should you buy a house or should you rent? Let's talk about that question. Let's, with the new retirement system that was coming on, the blended stuff, how should you think about that? Here's just some numbers that I've plugged in, and here's some thoughts on what I have about it. You need to make your own decision. But that was also one of the other things I said, you need to get rid of your debt. You need to live like no one else today so that you can live like no one else tomorrow. No matter what, you have to create margin in your life. If you're ever going to think about retirement in the future, you have to live below your means. There's no shortcut around it, period.
And And I think there's this mindset problem too. If you really want to get deeper into it from a debrief perspective and get real deep into this, it's a mindset thinking that you're in the military and you're not going to be wealthy. That is BS. That is absolutely BS, because you can be wealthy. I've done calculations on this, that a officer that retires at lieutenant colonel throughout their time in the military, they're going to make about $1.1 million that they could have had in their pocket when they retired from the military. That's not even starting their second career. As an enlisted member, about $500,000. If you were saving a little bit, putting it into, whether it's TSP, reducing your debt, all those things, I think people don't think that you're going to be wealthy. And that's a mindset problem.
And to me, kind of once you get some of those rules set up and do that, I mean, you get to, not only do you get to kind of push some of that and kind of pay yourself today to get there, which I totally support. And, nothing that I have necessarily means you need to do certain things in a particular order. I mean, everyone's life is different or whatever the case might be. But once you can get to a point where you've created that margin and you've set some of those money rules and you're putting money away for long-term retirement style investing, that means now you get to, go learn how to be a better salesperson, start a company. I certainly think tax advantages to starting a company, owning real estate, like those are certain things I absolutely push, but then you got to decide how you're going to build it. And that's kind of the exciting part, is once you have created that margin, as you do something on the side that you can be more active in, hopefully eventually you can have that replace your overall income. And then maybe one day you can be able to take a lot more vacations and stuff on the beach while your business runs itself, because you've put in all the systems in place in order to do so. Yeah.
And military members should do that. They should be thinking right now, I have 8 years left. I started my company this year because I'm not thinking about starting a company when I'm 60. I'm thinking about starting a company, having a company in place and starting to gain momentum so that when I do retire, I can transition and I have a company in place on day one where I don't feel like I have to go to Boeing. I don't feel like I have to go to Raytheon to work as a contractor. Right. I work for myself. I call the shots, and I'm doing something good for people of my own community. And I want to help military members become the most powerful investors that they can be. And I want to do it on my own terms, as my own president, founder, however you want to look at it. So yeah, you need to be thinking about retiring and what your job's going to be.
Well, I think there's a bit of an advantage too to being, if you're trying something on the side, you have to build it in a manner of building systems, because you cannot build it by yourself. You don't have the time to be everything for everybody. It almost forces you to build all those systems and to hire out appropriately in order to do that, which is actually a huge advantage when you get out, because now you're not stepping into a role that is you really, you can really devote your time to what really makes the money. And those are those strategic decisions that you're in to build that company, and you can hire out everything else and make it a much more profitable company from day one. And it only takes, even in that, everything that I have read from other, whether that's multi-level marketing, whether that's, real estate investing, whether that's, if you're delving into apartments or whatever, or building an internet business, 2 to 5 years is really all it takes to build something that is sustainable, that can replace your income. But it's going to take effort. It's going to take up a lot of your time, and you got to make some sacrifices. But again, it's going to help you build that margin in your life.
Yeah. And military people would say, military members, service members would say, well, I don't have the time to do that. And I'd say, well, what do you do when you get home? Like, don't have building your company interfere with your military career, because that's an ethics violation. You don't want that. Right. So like when I work, I am 120% into my work at work. When I get home, for me, watching TV doesn't give me anything anymore.
Yeah.
Playing video games when I was 20, loved doing that. I don't do that anymore because I get fulfillment in building my company.
Right.
I get fulfillment in learning how to do a Wix website. Like learning how to do these things, instead of when I retire, trying to figure out what to do with my life. And now I have to do all this stuff. Let me take chips at it. Let me nibble at this big monster, so that when I am at the end and I get out, and the Air Force doesn't want me anymore, and they spit me out and they say, oh, you're good. I'm ready to go. I'm ready to go, and I've got everything built. and I've been operating for years. And so you should always be thinking about the future and what you're going to be doing. So that's investing, right?
Yeah, that's right. That's right. Well, with that, man, there's honestly so much that we could delve into, and I certainly want to have you back on at some point in time. And if there's a way that I can, network Cash Flow Veteran and anybody else that's kind of coming into this sphere and what I see how it builds, I think, there could be a pretty strategic partnership there with kind of what you're putting together too.
Sure.
So I just think that's awesome. So final question that I got for you is, where can people find more about you specifically and the business that you got going?
So the easiest thing to do is email me. My email is pretty easy to remember. It's military investment group at gmail.com. My website is about to be launched. Doing some work. I'm doing some final legal reviews from an Air Force member. It's not as easy as somebody that's in the civilian world to do a website. It's got to be legally reviewed to make sure that I don't hurt the government or anything like that. So it's under legal reviews right now. But easiest thing to do is just email me at militaryinvestmentgroup@gmail.com, and we can go from there and see what you're interested in and move. Talk about your financial health assessment all the way to actual stock trading. So we can do the whole gambit and anywhere in between.
Awesome. Well, thanks so much, man, for coming on.
Thanks,
I really
John.
appreciate
Thanks for having me. I appreciate it.
For sure. I can't wait to have you on again. And I'm sure we can pick some more juicy topics that we can get into as well that we certainly might disagree on, but I hope that people are just going to learn from it and obviously have a good, respectful conversation over whatever it is and hopefully get people moving forward in their life. That's at the end of the day what I really want. Even if it's a difference in perspective, at least people are thinking, they're moving, they're getting out of their funk, out of their groove and moving into something that's propelling them forward.
I agree. Yeah. I love what you're doing. I love the podcast. Thanks for having me on.
All right, brother. Thanks so much. Take care.
Cool. See you, John.